In this video, we're going to go over how there's a big shift happening in the housing market right now, and now is the time to prepare because there's going to be some big things coming over the next few months. But specifically in this video, I'm going to be going over how foreclosures are back, they're surging, and how the trend is your friend till the end. And I'm also going to be going over, which I'm sure you've already heard about, is how Zillow has stopped buying homes and what this really means for the housing market and what we need to know to prepare right now. Okay, everybody, let's not waste any time. Let's get straight into the facts, the news, and the data. Look at this, everybody. Foreclosures are back and they're surging now that all the stimulus and the bailouts have come to an end. So here's what we know so far. Mortgage lenders began the foreclosure process on 25,209 properties in the third quarter alone. That is a 32% increase from the second quarter, and on a year-over-year basis, it's a massive 67% increase from the third quarter of 2020, according to ATTOM, a mortgage data firm. And of course, this is because they're coming off a low base and they're all saying, look, don't panic, it's all fine, it's only because the numbers were so low, which is true. But what we have to do is we have to watch the trend and see if this trend continues in the data next month. Because these are all early signs that the market is shifting. And because if you wait until foreclosures are in the hundreds of thousands or millions, well then it's too late. And for those of you that don't know, just to quickly jog your memory, government and private sector relief programs allow borrowers with financial difficulties to delay their monthly payments for up to 18 months. The missed payments could then be tacked onto the end of the loan period or repaid when the home was sold or the mortgage refinanced. Now, something you have to know about the housing market is the US, it's a big country. There's lots of states, there's lots of cities, there's lots of suburbs. The housing market isn't just one market. So there may be some cities or states that are booming right now. There may be some others that are falling. So let's break down to see what states are having the most foreclosures right now. Okay, so we'll start with the top 5. So coming in at 5th is Illinois with 1,362. 4th, New York with 1,363. 3rd, Florida with 2,564 foreclosures. 2nd, Texas with 2,827 foreclosures. And coming in at first place, number 1, can you guess which state has the most foreclosures? California. California had 3,434 foreclosures, which is just more bad news for California, especially considering they already have a massive homeless crisis going on right now. But that's not the worst of it. We've now got this news, everyone. So Zillow's house flipping hits a snag as the red-hot housing market shows signs it's cooling. The online listing giant has been buying and selling thousands of homes in recent months through its iBuying program, which depends on the company's ability to use number-crunching software to predict where house prices are going. Now, I'm sure you've all heard that the reason they're doing this is because labor shortages, especially for their home flipping model. But I'm sure this is just one piece of the puzzle, and I'm also sure they know that the housing market is going to be cooling off in 2022, and I've got data to show you the prices are already starting to decline. And we'll have a look here. We can see Zillow's share price is down over 50%, and I guess their business model of buying homes, $50,000 over market value and then trying to flip them for a profit, it sounds pretty stupid to me, and it doesn't seem to be working out, and we'll see if they're going to have to dump the rest of their homes later in the year. So what you have to know is, in the last quarter, Zillow brought over 3,000 homes, more than double than they brought the previous quarter. So if they stop buying, that's going to take more demand out of the housing market, especially because they were overpaying for house prices, lifting the housing market higher. Okay, so foreclosures are back. Zillow has stopped buying homes, but what's more proof and more data to show that the housing market is cooling and in some areas falling? Let's have a look, everyone. Well, look at this, everybody. This is the median sales price of existing homes. And as we can see here, it hit a peak in June 2021 of 362,000. But then in July, it declined to 359,000. Then in August, it dropped again to 357,000. And We just got the new data for September and has fallen to $352,000. And I'll be very interested to see what next month's data says. Because what else is happening right now? Well, the 10-year US Treasury note is starting to make a comeback. We can see here in August it was down to around 1.17%, but now it's starting to climb back up as the Federal Reserve is set to taper soon, I hope. They keep saying they're going to taper, but they still haven't delivered yet, even though we've got crazy inflation of over 5%, when the official inflation number we all know is at least double digits. We can see now it is climbing, and that means the average 30-year fixed rate mortgage is also going up as well. And so what that means for home buyers and investors, well, the cheap credit and the cheap money that they got before, and then that way they could afford to borrow more money and afford to bid up house prices, they're not going to be able to borrow as much because the borrowing costs are going to increase. But what is the biggest risk for the housing market of all? Well, the biggest risk I think right now is a policy mistake by the Federal Reserve. They are playing with fire right now. Now, I know you may be thinking, look, they've been calling for a housing downturn for the past 6 months now. Nothing's happened. Well, the reason that hasn't happened is because when we did the fundamental research 6 months ago, you could look at inflation and see the trend that was going on, and you could see, okay, look, this is getting out of control. The Fed is going to have to step in. They're going to have to taper and lift interest rates. And normally in the housing market, for every 1% increase in interest rates, that means house prices could cool anywhere between 5 and 10%. So really what should have happened is 3 months ago, the Federal Reserve should have tapered, and now they should have slowly started lifting interest rates. And that means home buyers would lose confidence because they know their borrowing costs are going to go up. And then that means home buyers will be leaving, hedge funds will be leaving, waiting for the housing market to correct, so then they can come up and buy up homes for a discount once prices fall anywhere between 10 and 20% if interest rates go up 1 to 2%. So again, what I'm seeing with these supply chain issues, what I'm seeing with manufacturers, what I'm seeing with producers, what's going on right now with the factories in China, what's going on with the energy crisis that's going on around the world, costs of everything are about to go up much, much more. And what we're about to get is a second round of inflation. And people, don't believe a word the Fed says. What they are doing right now is criminal. Just like how the Fed presidents got caught insider trading, what they're doing right now is they're absolutely destroying the dollar. They're absolutely destroying your purchasing power. They're making the cost of living for the poor and the middle class unbearable. And really now, there is no more middle class. Now the top 1% doesn't just own more than the bottom 50%. Now the top 1% in America owns more wealth than the whole 60% middle class. So what I think is going to happen in early 2022, when we see that this inflation is just getting worse, not only will they taper completely, then they're going to have to start lifting interest rates to get this inflation under control. And imagine what would happen if interest rates just went up 2 or 3%. You will see all these people that maxed out their mortgage, all these people that maxed out their credit cards, took on stocks with margin, took on cryptocurrencies with margin. They're going to get completely wiped out because people are on the edge. There's so much euphoria in the markets right now. People think it can only go up, so they're putting money in the markets that they can't afford to lose, and they're also going into the markets with leverage. And leverage makes the next crash even faster and even worse, and the Fed is not going to have any tools to fix it. So everyone, that was just my thoughts and opinions. What's going on in the housing market right now? Some new news, some new data. What do you think? Do you think the housing market will turn in 2022? Let me know. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you in the next video.